Ladies and gentlemen, thank you for standing by, and welcome to the Q4 2019 GLUU Mobile Earnings Conference Call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question-and-answer session. To ask a question during the session, you will need to press star 1 on your telephone. Please be advised that today's conference is being recorded. If you require any further assistance, please press star then 0. I would now like to hand the conference over to your speaker today, Mr. Harman Singh, Vice President of Finance. Thank you. Please go ahead.
Thank you, operator. Good afternoon, everyone, and thank you for joining us on GLUU Mobile's fourth quarter 2019 earnings conference call. On the call today are Nick Earl, President and Chief Executive Officer, and Eric Ludwig, COO and Chief Financial Officer. During this call, we will be making forward-looking statements regarding future events and the future financial performance of the company. Any forward-looking statements that we make today are based on assumptions that the company believes to be reasonable as of this date. We undertake no obligation to update these statements as a result of future events. We caution you to consider the important factors that could cause actual results to differ materially from those in the forward-looking statements in the press release and during this conference call. These risk factors are described more fully in our documents filed with the SEC, specifically the most recent reports on Forms 10-K and 10-Q. During this call, we will present both GAAP and non-GAAP financial measures. The non-GAAP financial measures are not intended to be considered in isolation from, a substitute for, or superior to GAAP results, and we encourage investors to consider all measures before making an investment decision. For complete information regarding our non-GAAP financial information, the most directly comparable GAAP measures, and a quantitative reconciliation of those figures, please refer to the supplemental presentation accompanying today's earnings call that can be accessed via our investor website, www.gluu.com/investors. As a reminder, consistent with our financial presentation and for all the information aside from bookings, or as otherwise stated below, we will discuss results on a GAAP basis and refer you to changes in deferred revenue, the deferred cost of revenue, and non-GAAP operating expenses totals in our financial tables. This data will provide a GAAP to non-GAAP reconciliation of the quarter's financial results based on the same methodology we've used in prior quarters. We are also providing a supplementary Excel file on our IR website to more easily aid in this reconciliation. Both the PowerPoint and Excel file are now accessible on the website. We encourage you to follow along with the slides during this earnings conference call. And with that, I'd like to turn the call over to Nick.
Thanks, Harman. Hello, everyone, and thank you for joining us today for GLUU's fourth quarter and full year 2019 earnings call. I will provide an overview and highlights of our results as well as our game development progress. Eric will then discuss our financial results and guidance in more detail. GLUU ended 2019 on a high note, beating top and bottom line financial expectations for both the fourth quarter and full year. A strong performance was driven by the second consecutive quarter of record bookings from Design Home and Covet Fashion, and the best fourth quarter in Tap Sports Baseball's history. Overall, year-over-year bookings were up 10% for both the fourth quarter and full year, reflecting the continued strength in our 3 growth games and the addition of Diner Dash Adventures. We reached record adjusted EBITDA profitability for the full year and record GAAP profitability, a major milestone for the company. This financial outperformance, combined with the significant progress in our pipeline, supports our confidence in 2020 and beyond. Turning to our live titles, Design Home delivered another record quarter with $46.6 million in bookings, a 6% year-over-year increase. This game's continued strength was driven by a combination of event-driven live ops and the addition of deeper meta features, including the launch of the mid-century modern and mountain homes. Covet Fashion also delivered another record quarter with $17.7 million in bookings, up 19% from last year's comparable quarter. The strong growth was driven by our successful winter season launch, improved prop shop monetization, and the addition of new merchandising through mega bundles. Covet grew 24% for the full year, demonstrating the team's ability to stack bookings of a title that is now finishing its 7th year. Tap Sports Baseball recorded its best fourth quarter in the title's history with bookings of $19.4 million, driven by its most robust live ops off-season effort. This performance capped off the franchise's highest bookings year of all time with 21% growth over 2018. Looking ahead, we are set to release TSB 20 on March 17th. We are excited to announce global territory expansion to over 100 additional countries, as well as Aaron Judge as the new cover athlete. New features will include a new home run derby mode and the addition of all 30 MLB stadiums. Our most recent launch, Diner Dash Adventures, had bookings of 8.8 million in the fourth quarter. While still in an early stage, the gameplay and original GLUU IP are resonating well with users, and we believe this title will be a meaningful contributor in 2020. Moving to our pipeline. In last year's third quarter, we made a strategic decision to move the worldwide launch of Disney Sorcerer's Arena to the first quarter of 2020. On December 13th, we released a major beta update to the Canadian market with a significant change to turn-based core mechanic with expanded character rosters and an enhanced cinematic experience. We're pleased to report that the additional development time has yielded the intended results with notable improvements in both retention and monetization. We're excited by the recent beta progress and remain on track for a global launch in late March. Originals, our interactive story platform, entered beta in Canada on January 20th with encouraging early results. The Toronto studio continues to refine the speed and quality of content production while directing creative efforts towards content that is resonating with our audience. We continue to plan on a mid-2020 global launch for Originals. Our new Deer Hunter game entered beta in the Philippines on December 13th. In our 7-year history of owning this IP, this franchise has launched 2 successful titles reflecting its engaging gameplay and large number of organic downloads. Our GLUU Sports studio is building this title for the live ops and elder game era. While the initial beta period will focus on stability and retention, we will add social and deep meta to drive monetization in the coming months. We're excited about this title's potential and anticipate a global launch in the second half of the year. Our social fishing game also entered beta in the Philippines in early January, and we are pleased with its initial performance. The team's creative experience and ability to quickly integrate with GLUU's infrastructure have been the driving forces behind the strong progress we've made in developing this title in a relatively short period of time. Next, I'd like to touch on 2 growth opportunities for 2020. First, we will be increasing our focus on M&A to complement our existing portfolio and growth game strategy. GLUU has a strong track record of not only finding talented teams and studios, but also nurturing new titles with the critical resources and expertise necessary to achieve accelerated growth and profitability. Secondly, as the gaming landscape continues to evolve, we are focused on opportunities that will broaden our audience and deepen connections with our players through cross-platform connected play. To that end, we are exploring the extension of 2 key GLUU franchises, Design Home and Tap Sports Baseball, to the browser. We see multiple potential benefits from expanding our platform footprint and look forward to providing updates on this initiative in the coming quarters. 2019 has been a strong year for GLUU, highlighted by record bookings in our 3 growth games, the highest adjusted EBITDA profitability in our history, and record GAAP profitability. This past year marked GLUU's 3rd straight year of double-digit year-over-year bookings growth, proving that the company's foundation is strong, and we believe that we have a sustainable operating model for long-term growth and profitability. We expect 2020 to be a transformational year for the company as we look to continue to grow our core business and stack additional bookings from our new title launches. I'll now turn it over to Eric, who will provide details on our financials and outlook.
Thanks, Nick, and good afternoon to everyone on the call. I will provide a closer look at our financial results for the fourth quarter and full year 2019. Then I will walk through our guidance for the first quarter and full year 2020. In Q4, we delivered strong top and bottom line results that beat our guidance. As Nick noted, these results were led by record bookings from Design Home and Covet Fashion, as well as the best fourth quarter results in Tap Sports Baseball's history. Going through the details of the quarter, revenue was $112.9 million. Bookings were $108.4 million, up 10% over last year's fourth quarter. Royalty-free GLUU IP titles generated 73% of bookings. Ad bookings were $12.4 million, or 11% of total bookings. And on a GAAP basis, we generated an all-time record net income of $10.8 million, or earnings of 7 cents per diluted share. Growth games grew 10% over last year's comparable quarter and contributed 77% to total bookings. Design Home grew 6% to $46.6 million. The Tap Sports Baseball franchise grew 13% to $19.4 million, and Covet Fashion was up 19% to $17.7 million. Diner Dash Adventures generated $8.8 million in bookings in the fourth quarter. This was due to the planned reduction in UA spend from Q3 to Q4 due to seasonally higher CPIs in the holiday quarter that we had guided both back in August and November. Diner Dash Adventures transitioned from having a negative studio margin in the third quarter to a slight profit in the fourth quarter. As a new title launches, we generally expect its profit life cycle to go through 4 phases, with the goal of it ultimately becoming a scaled, profitable growth game within 12 to 24 months. The first phase is in the first quarter or 2 following global release, where we lean heavily into spending on launch UA. Although the UA spending is expected to be ROI positive over the life of the users we acquire, the bookings generated in this phase are not enough to offset all of the studio costs, including UA. Thus, in this first phase, the title has a negative studio margin. This is what occurred with Diner Dash in the third quarter. In the second phase, we are focused on new titles becoming adjusted EBITDA break-even, where bookings cover all studio costs, including UA. This phase typically can last 1 to 3 quarters, and Diner Dash hit this milestone in the fourth quarter. The third phase is where the title is scaling bookings, and we are optimizing UA, live ops, and events. A title in this third phase is expected to be halfway between adjusted EBITDA break-even on all studio costs and the long-term studio margin targets that we expect from our growth games. Within 12 to 24 months from launch, our goal is for our growth games to hit phase 4, where they are meeting our internal studio margin targets for the size of bookings they are generating. In all 4 phases I just described, when I refer to studio margin, I am talking about all bookings and costs associated with the game. On the cost side, this includes Apple and Google fees, royalties for licensed products, hosting costs, as well as our studio headcount and accrued bonus costs, plus allocated overhead, and all product marketing and UA spend. Larger titles such as Design Home and Tap Sports Baseball have higher studio margins than Covet Fashion due to the booking scale and marginal flow-through. In comparing studio margins to GLUU overall margins, the only items excluded are sales and marketing headcount costs, allocated G&A, and some central tech headcount costs. Kim Kardashian Hollywood saw bookings of $8.2 million in the fourth quarter. This was an 80% quarter-over-quarter increase. We ramped UA this quarter due to the high ROI yielding users we were able to acquire with the launch of the new season of Keeping Up with the Kardashians on TV. On the expense side, adjusted platform commissions were $28.7 million, adjusted royalties were $5.9 million, and hosting costs were $1.9 million. UA and marketing spend was $24.7 million, or 22.8% of bookings. This compares to $23.4 million in last year's fourth quarter and $40.2 million for this year's third quarter. Operating expenses, excluding UA and marketing, were $33.4 million compared to $29.8 million in last year's comparable quarter. Turning to the full year 2019, revenue was a record $411.4 million. Bookings reached an all-time high of $423.3 million, growing 10% over 2018. Royalty-free GLUU IP titles generated 70% of bookings. Ad bookings were $50.7 million, or 12% of total bookings. And on a GAAP basis, we generated a net income of $8.9 million, our largest GAAP profit ever. On a GAAP basis, net income for 2019 was 6 cents per diluted share for the full year 2019. Growth games grew 16% on a year-over-year basis and contributed 79% to total bookings. Year-over-year, Design Home bookings grew 12% to $176.3 million. The Tap Sports Baseball franchise increased 21% to $90.9 million, and Covet Fashion grew 24% to $66.1 million. On the expense side, adjusted platform commissions were $111.5 million, adjusted royalties were $26.4 million, and hosting costs were $7.2 million. UA marketing spend was $118 million, or 27.9% of bookings. This compares to $95.1 million last year. Operating expenses, excluding UA and marketing, were $122.6 million, compared with $117.3 million last year. We ended the year with a cash balance of $127.1 million and generated $29.9 million in free cash flow for the year. In the fourth quarter, we received 4 monthly payments from Apple versus a typical quarter of 3 monthly payments. This happens every few years where Apple pays 13 months in one year and 11 months in the following year. This had the effect of pulling into 2019 an extra $13 million of accounts receivable that typically would have been collected in January of 2020. Free cash flow for the first quarter of 2020 will be negative due to this timing of receiving only 2 monthly payments from Apple, coupled with the payment of our annual bonuses in February. As we discussed last quarter, our bookings guidance philosophy is to exclude any contribution from new title launches until the quarter after such title is launched. For the full year 2020 guidance, we expect bookings from our core business in the range of $423 million to $433 million, representing a low single-digit increase over 2019's actual results at the midpoint. To provide a bit more color on the bookings guidance, the key components comprising this core business bookings guidance are as follows. Our 3 growth games, Design Home, the Tap Sports Baseball franchise, and Covet Fashion, are expected to grow high single digits on a percentage basis year over year. Diner Dash Adventures will have a full year of contribution in 2020, and our catalog will decrease approximately $30 million on a year-over-year basis. The combination of these will result in a bookings range of $423 to $433 million. Our $433 million high-end guidance excludes any contribution from new titles, including Disney, Originals, and Deer Hunter Next. For the sake of clarity, we will include bookings for Disney in our guidance for the first time on our May earnings call. On the expense side, and at the midpoint of our bookings guidance, we expect adjusted platform commissions of $112.6 million, adjusted royalties of $25.7 million, and hosting costs of $7.3 million. UA costs will be approximately $109.6 million, reflecting 25.6% of UA spend as a percentage of our core business bookings. All other adjusted operating expenses are forecasted to be $136.2 million. In terms of profitability for the full year 2020, I wanted to reiterate the guidance that we laid out last quarter. Specifically, excluding bookings and variable costs from new titles, we expect adjusted EBITDA for 2020 to be flat at the high end of guidance in absolute dollars with the full year 2019 actual results. I would highlight that studio headcount costs for new titles have already been included in our operating expenses in our adjusted EBITDA outlook, and in 2020 this totals over $24 million of expense in our core business adjusted EBITDA guidance. Our 3 growth games are performing at scale and provide significant margin flow through overall as well as on a marginal dollar basis. We believe that Disney Sorcerer's Arena and Deer Hunter Next could, over time, become scaled growth games which contribute meaningfully to our long-term margins. When looking at the new titles in 2020 and excluding the headcount costs, which are already expensed in the core business for adjusted EBITDA guidance purposes, we expect that the first half of 2020 for new titles will be adjusted EBITDA losses, while the second half of 2020 will be adjusted EBITDA profitable. Thus, we expect that 2020 new titles as a standalone group and for variable costs will be approximately adjusted EBITDA breakeven for the year. Given the expected timing and margin characteristics of our 2020 launches, when combining the core business with new titles, we anticipate a low single-digit adjusted EBITDA loss in absolute dollars in the first half of 2020, and we believe that adjusted EBITDA will grow significantly throughout the second half of the year as new titles scale. And we expect to exit 2020 with adjusted EBITDA margins of at least 15% in the fourth quarter, inclusive of new titles. For the first quarter of 2020, GLUU expects its existing core business to generate bookings in the range of $93 million to $95 million, representing a 1.5% increase over last year's first quarter at the midpoint. As a reminder, this excludes any bookings from Disney in the first quarter. On the expense side, at the midpoint of the bookings guidance, we expect adjusted platform commissions of $25 million, adjusted royalties of $5.1 million, and hosting costs of $1.8 million. UA costs will be approximately $30.9 million. I would point out that this UA guidance for the first quarter includes our launch UA assumptions for Disney Sorcerer's Arena for modeling purposes, but our guidance has no bookings contribution for Disney. All other adjusted operating expenses are forecasted to be $33.9 million. In summary, we ended 2019 with record revenue, bookings, net income, and adjusted EBITDA. We are excited about the recent improvements on Disney, on retention and monetization, and look forward to providing meaningful updates on the next earnings call regarding this title, as well as the 2020 version of Tap Sports Baseball. We'll now open the call for questions. Operator?
Thank you. As a reminder, to ask a question, you will need to press star one on your touchtone telephone. To withdraw your question, press the pound key. Please stand by while we compile the Q&A roster. Our first question comes from Mike Hickey with The Benchmark Company. Your line is now open.
Hey, Nick, Eric, congrats, guys. Strong quarter, strong year. Curious on your M&A commentary, Nick. I think that's a bit of a pivot from what you've been saying in recent history. So curious sort of your thoughts there and perhaps being more aggressive in M&A, what you're seeing in the market, what resources you're putting to finding deals, what sort of deals you're looking for. Thank you.
Yeah, thanks, Mike. So we've really been focusing the last 3 years on building the internal studio infrastructure and making sure that we can get that up to speed, and we've got the foundation underneath that to be able to create growth games. We think we are in a good place now, and obviously this year is a big test for our creative and executional abilities. But we really want to kick this year off also with spending more time and energy and bandwidth on the opportunity to find other studios via M&A, and these would be anywhere from the acqui-hires like we just did with our fishing team, right up to larger ones that we've done in the past, like CrowdStar. We have a good track record of integrating and leveraging the infrastructure, both on the creative side, on the analytics as well as UA, et cetera. So we just think we're well positioned for it now. We think we've got the bandwidth to be able to expand our focus across internal and acquisition opportunity, and we just think this is a real great growth proposition for us going forward. So we'll see how things play out. We've got more focus from our head of corp dev, who's going to be spending more time in this than he was able to in the past, and I think it is just a great opportunity out there in the marketplace for buyers like us. So we'll go after it and see how it plays out.
Thanks, Nick. Last question from me on the past sports space. So it seems like every quarter you're driving upside here. I guess just need more insight into where the strength is coming from, how you think about 20, and then your release date in Q1. Is that earlier than normal? I didn't get a chance to compare. It felt like maybe it's a little earlier than when you normally come out. If there's any shift, maybe from 2Q into 1Q, if that's the case. Thank you.
Yeah, we're continually surprised, positively surprised at how well this franchise performs. It's really a testament to the strength of that team and their capability on the live ops front. They're also been adding more systems and features in the Elder game, which really drives monetization and engagement. We think the experience is far superior than what it was a couple years ago. And what's really exciting is that there's a lot going into the game for 2020 that I think is going to continue to drive the growth. So we're definitely bullish on this game. And then the second part of the question was about the launch date. Yeah, we're going to launch this on March 17th, which is earlier than we normally do. We've got obviously another launch for Disney, so we're trying to space them out a little bit. But they'll both be in that latter part of March. And we've obviously got a lot of execution to do here with two big launches, but we think we're prepared for it, and definitely looking forward to the 2020 version of baseball.
All right, thanks, guys. Best of luck.
Thanks, Mike.
Thank you. Our next question comes from Matthew Cost with Morgan Stanley. Your line is now open.
Hi, guys. Congrats on the quarter. If you could, two for me, if you could just go over your philosophy in terms of category mix. Obviously, you're making a big push into RPG and strategy with Disney Sorcerer's Arena coming later this quarter. What are your thoughts in terms of allocating resources to different teams, or obviously your expanded focus on M&A in terms of broadening away from lifestyle and sports and pushing into those other categories? And then if you could, just a quick update on the CrowdStar title and sort of how you see it layering in with Design Home and Covet Fashion. Thank you.
Sure. Yeah, I'll take both of those, and Eric can jump in if he's got any comments. So, yeah, from a category perspective, we're not purposely setting out to integrate or go after sectors or categories in particular. I think we're more driven by the intent and, the kind of the creative interest that the teams have. And the team that's on the RPG game on Disney, this is really in their wheelhouse. It's something they're very interested in. And when they came on board, we gave them, pretty much a blank canvas on which to figure out what they wanted to do, and they really wanted to go after this space. So it's a little less purposeful than what it may seem. I think we're looking at the opportunity to go after both the two what we call umbrella brands, and that really is the female lifestyle side, and that's really the CrowdStar games. And then on the other, pretty much the other side of the coin, the more male sports and outdoor games, and that's obviously baseball, but also deer hunter and fishing. So, I look at it from those as being the kind of the big opportunities for us that I think we'll definitely continue to go deep on. And then we'll add this RPG and see how this does for us, and figure out where that takes us going forward. And then the second question was, I think, on what we call P3, which is the third game from CrowdStar. We're not talking a lot about it just yet. We just wanted to make sure that our investors knew it was in motion. We will be getting that into beta sometime soon, but we were going to definitely take our time and get this one right. There's just a massive opportunity with the third, we believe, with this third CrowdStar game. It'll feel like the other two, but it is in a different vertical, and we'll leave it at that for now, and have a lot more to say for that over the course of 2020.
Great, thank you.
Thanks, Matthew.
Thank you very much. Our next question comes from Darren Aftahi with Roth Capital Partners. Your line is now open.
Hey guys, afternoon. Thanks for taking my questions. Three, if I may. So, on your 2020 growth drivers, I think Eric, you had said the growth games high single digits. I'm just kind of curious, one with Design Home and two with Task Force Baseball. I think you said 100 new countries. Can you kind of give us a sense? Because it looked like Design Home only grew, I want to say, 6% in the fourth quarter, if my memory serves correct. What's kind of a cadence between those three games? Question two, maybe for Eric. I think Q1, the implied EBITDA looks like a little bit of a loss. Is that driven mostly by the implied Disney UA spend? And then three, maybe for Nick, now with Disney and in beta for a while in Canada and maybe 45 days or less from formal launch, what are your kind of thoughts going into that? Thank you.
Yeah, lots to unpack there, Darren. So let me first start off on the three growth games. So as we've said in the past, that our games have sometimes some seasonality. So baseball, as always, we've talked about, has seasonality. So in the first quarter, we always see a degradation from the third to fourth to first quarter for baseball, and then it comes roaring back with growth in the second quarter, and then typically plateaus in the third quarter. As Nick talked about in his prepared remarks, there is a ton going into this new baseball version. Everything from us doing a better job at bringing over the 2019 users into the 2020 version. We're also unlocking more user acquisition dollars by looking at it kind of a cross-year multiplier in terms of ROI that we've done, some analysis we've done, coupled with unlocking a lot more countries, which we've never had access to, as well as having the new stadiums and the home run derby. So I think baseball, we think those are the opportunities for growth drivers. I think the year over year and the quarter over quarter growth will look the same as it has in the past years. But as you see in the IR deck, we've had a great 7-year running growth of this title, and this is the epitome of what we call a growth game. Talking about Design Home, yes, we had kind of a year-over-year 6% growth. These titles get to plateau and then grow again and plateau and grow again. We've talked about that base camp philosophy before. I think we had kind of that base camp in the first half of this year around some UA pressure, so that was more externally generated plateauing, and then we had growth in the back half. To be very clear, record growth both in the third quarter and then again record growth in the fourth quarter. So I think, we are looking at deepening more meta as well as other monetization targets for Design Home. Covet Fashions has just a phenomenal year, growing 20% plus on a year-over-year basis on the backs of Prop Shop and a lot of monetization techniques. So I think, we've been hopefully conservative in our guidance that the three growth games collectively will grow high single digits. That was what our guidance was last November. about 2020, and we've really been largely unchanged from what we said there to now. And hopefully that proves conservative. Then going into Q1 on the EBITDA loss. It's a small guidance of adjusted EBITDA loss, about $1.5 million EBITDA loss, really largely from a couple of reasons. One, we have that seasonal downtrend in terms of bookings from Q4 to Q1 on baseball, and that takes just an overall reduction on the quarter-to-quarter bookings. Secondly, we also do see a pretty golden buying window opportunity. We've talked about this term before, typically in January and early February, with the hangover that retailers will have in spending in the holiday seasons. We see CPIs come down from the November, December levels into January, so we lean heavy into that. And then thirdly, yes, you definitely saw that in my guidance talked about I am including in that guidance 0 revenue or bookings from Disney, but I do have my launch marketing, both my product marketing spend, as I've used the term escape velocity spend, as well as the week plus of UA spend that we have for the quarter as well. So that's what's driving that guidance on a quarter-to-quarter down base on EBITDA. And then the other one was Disney. Over to Nick.
Yeah, actually, just one comment before we get to Disney. As we go through the year and start to stack bookings, we do expect an acceleration both on top and bottom line, and the expectations that we will exit 2020 with about 15% margins, maybe a bit higher. So it does pick up as we go through the year. So Disney, you asked about. This was really interesting for us as we made that decision last year to move it out, and the intent was to do a reboot of the core fighting mechanic, which we've done. The very good news, at least what we're seeing in the KPIs in Canada, is that it is improved dramatically in retention, engagement, and monetization, which is really nice to see. So that is really coming together, and we feel like the time that we took will be well worth it by the time we launch it. But a new fighting mechanic, so really a new core loop and core mechanic, expanded character roster, which is much more cinematic in nature, so you really show off the heroic nature of the characters. And really building out the social and live operations, continue to tune the economy, and get this game polished for release at the end of the quarter. So far so good. We're not talking about KPIs just yet. We'll talk in more detail once we get through the launch. But we're very happy with the way things are going. We definitely have a challenge on installs. That is not unique to GLUU. Of course, that's industry-wide. We think we've got good execution plan there. But I feel like the game unit economics are solid and trending in the right direction. We're just going to have to make sure we figure out how to get installs, and a lot of that is going to be employing our strong UA capabilities, going after kind of the marketing side and the brand side, and then of course leaning into the strength of the Disney brands.
Great. Thanks, guys.
All right. Thanks, Aaron.
Thank you. Our next question comes from Matt Thornton with SunTrust. Your line is now open.
Hey, good afternoon, guys. I joined a little bit late, so I apologize if any of these have been asked. Maybe for starters, you talked a little bit about the EBITDA linearity throughout the year, starting obviously with a small loss in 1Q. My question is, how do we think about 2Q? Should 1Q kind of be peak loss? Should we think about 2Q as similar to 1Q and then ramping into the back half of the year? Any color there would be helpful. And then just secondly on the fishing game, it would seem to me that the in-game economy is an opportunity there is probably very similar to Deer Hunter. And my question is the game mechanic that dramatically different? Any color there? And could this game conceivably kind of hold into 2020 given kind of the familiarity and the fact that it's already kind of entering beta? Any color there? Thanks, guys.
Great. I'll take the first one, Matt, and turn over to Nick on the fishing topic. So in terms of EBITDA, I'd say what we talked about was the first half, inclusive of new titles, will be a slight single-digit loss for the 2 quarters combined. So I think the midpoint guidance for Q1 is about 1.5. So, it's going to be something, a little bit bigger than that, but not massively bigger than that in the second quarter. And that will really be because we'll have a full quarter of, call it phase one spending on Disney. So I talked about these phases. So Matt, you may have missed it in my script. I talked about 4 phases of a launch from a new title. Phase one is where we're spending a lot, even though it's ROI positive, but we're forward spending with CPI being low. So Q2 will be a full quarter of phase one spending on Disney, and that will drive, more EBITDA than the first quarter. We will also have Task Force Baseball, which comes out of the gate rip roaring, typically by April 1st. And so I think that title will be kind of offsetting probably profitably. Task Force Baseball is profitable out of the gate literally on the first day, even though we are spending. So it's a little bit different. Baseball, call it, it's in the 7th year. It's already very mature at phase 4. But those two things are going on in the second quarter. But then our Q3 and Q4 is where, basically all of the EBITDA comes in, and it's kind of out of the gate pretty big in Q3 and then bigger in Q4. But the combination of the small loss in the first half and the profit in the back half equals, at the high end of guidance, the full year 2019 adjusted EBITDA that we just put up on the ticker. And Matt, go ahead.
Yeah. So fishing, I think it's a little too early to comment on launch timing. It's possible that it can make 20, but we want to give it its due course and make sure that we really create something that's enduring and long term. In terms of the structure of design and gameplay, it has elements of both Deer Hunter and Task Force Baseball, and is part of that studio group, so that that's kind of makes sense that it would be that way. A little more like Deer Hunter, so you've got a very compelling core mechanic that is both enjoyable but simple, and then a very deep Elder game that's built around social and upgrading and really an RPG style Elder game. So I'll leave it at that for now. We'll be talking about this more over the course of the year, and be sharing updates as we go ahead. But we really like the way the studio operates. They're incredibly agile. They've paired very well with our creative infrastructure, as well as the analytics and the other offerings that we've got as a scaled company. And they're a great cultural fit. So far so good with this group, and very excited about the title. And like I said, we'll be talking a lot more about it as we get through the year.
Great. Thanks, guys.
Thanks, Matt.
Thanks, Matt. Thank you. Our next question comes from Franco Granda with D.A. Davidson. Your line is now open.
Hi, guys. Good afternoon. Congrats on the results, and thank you for letting me ask a couple questions. So the first really is on the sports side of things. I know you kind of talked about it in the first question, but right now you have MLB leading the charge, and you're adding Deer Hunter and tap fishing. Do you think that the sports category will eventually get to the point where it could rival the lifestyle games?
Yeah, I do. I think it certainly has that potential. The lifestyle business for us is definitely bigger now, but we've got potentially 2 games that are coming in this year and next year that really could move the needle on sports. I really love the fact that we've got the balance of the female side of the business and the more of the male side of the business. And it gives us tremendous diversity as we think about how we market our games, in terms of spending our UA dollars. But I also love the fact that we're driving these 2 umbrella brands that really could be bigger over the coming years and very meaningful for the company. So hard to know exactly what the absolute numbers are going to be relative to lifestyle. We take them both equally important, and or we view them that way, and feel like there's tremendous opportunity to build these umbrella brands. So we'll see how the games go as we add more, and we will be talking more about the more of the high level brands as well as the individual games as we go forward.
Yeah, and Franco, if I can add there, and I'll use a little bit of a sports analogy here. We've been talking over the last kind of 6 months in a couple other settings, a couple other webcasts and events, using baseball parlance in terms of where our games sit, singles, doubles, all the way to grand slams. And the industry has grand slams. I would call it grand slam, but $750 million a year or more of revenue. There's about 5 to 10 of these titles. We don't have any of those. The margins are incredible. They persist and sustain for a long time. Home runs, I would call, are $250 million a year to $750 million a year. There's multi-handfuls of these titles, multi-dozen handfuls of these titles that are out there. And we don't have any of those, and the margins of those titles are also phenomenal. Then I would call a triple being what Design Home is. Triple being $150 million to $250 million a year and growing. And Design Home has very, very good studio margins. I've talked a lot about studio margins, in the mid-30s. Without allocations of SG&A costs. And in baseball, is a double. Call a double of $75 million to $150 million. Interestingly, our baseball title has margins of a triple, even with the license fees to the MLB, because the team's small and we've been able to reacquire users year over year over year. So it's in that mid-30s studio margins as well. And then a single, call it, is a game that's $25 to $75 million a year. And we've got Covet Fashion that's at the height of that range. Diner Dash is at the lower end of that range. And so as I think about the sports category that we're in, Nick has said in the past that he feels that Deer Hunter as a category and game could be as big, if not bigger, than baseball. Fishing is also a title that, looks like other games out there that are in the sports category. So kind of answering that question, one, I want to make sure I address the singles, doubles, triples analogy, because we've never done this on a call, and it's going to be something we'll talk about in the future. And I think it really also ties back to the four phases of profitability that we get to. But yeah, we're very excited about the sports category, and think it will be one that's growing for us in the years to come.
Well, yeah, thank you for the color. That's really helpful. And then one more, if I may. It's exciting to see that you're sort of maximizing the growth from the growth games by bringing them to PC. Why did you choose Design Home and the MLB game? And then is there potential for more to join later on?
Yeah, listen, those are two of our biggest games, actually our two biggest games, so it just kind of makes sense to look at extending those. They've got big audiences, they've got really engaged audiences, and they both will benefit tremendously from being on the PC layout. If you think about a PC screen versus a mobile screen, there's a lot of information that needs to be delivered over a mobile screen that can be better delivered on PC. So we just think they're just perfect fits. The teams have the capability and the bandwidth to explore these platforms. So really those are kind of the two key reasons. And if this works, if we start to get some early signals from this being a positive move, we'll certainly look at other options inside the portfolio, as well as the new games that we're bringing out. But for right now, we think these are the best candidates, and we'll have to see how this all plays out. This is a new business for us, so it's we'll be treading carefully as we get into it.
Great, thank you.
All right. Thanks, Franco.
Thank you. And our next question comes from Jeff Cohen with Stephens. Your line is now open.
Hey, guys. Thanks for taking the question. If I'm not mistaken, I think the Kim Kardashian license agreement is up fairly soon. Given that game is still producing pretty significant revenue for you guys, can you talk maybe about whether there's a plan to renew the contract or how you think about sunsetting the game?
Yeah, sure. Yeah, I'll start and Eric to jump in. So we have 18 months left in that contract, and we are incredibly happy with the way it's going. No comments yet on what's next or what happens after that 18 months. We absolutely will update all investors and the street when the time is right. But we love working with her and her team. We respect the way they go about their business, and this audience is a highly engaged one. You saw by the results in Q4 just how much they absolutely love this experience. So it is going well. It continues to go well. We will update as we get towards any changes with regards to the contract.
Great. Thanks, Nick.
Thanks, Jeff.
Thank you, and I'm showing no further questions in the queue at this time. Ladies and gentlemen, thank you for your participation on today's conference. This does conclude your program. You may now disconnect.